Morning.
Morning.
Guys. How are we all?
Bloody good.
Yeah. Got hay fever. It's mad hay fever in Adelaide.
So do I, Ash. I'm shocking this morning.
Yeah, Dad brought in a box of tissues because he could hear me sneezing.
Spring has sprung.
Every time we go to London, I get it so bad. Like as soon as we land, all the pollen's out.
So there's apparently that because I have it bad in London as well and New York, there's a pollen in that part of the world that if you didn't grow up there, your hay fever is like 5 times worse than if you grew up there.
Yeah, that checks out. Like
Yeah, there you
that
go.
first time I went to London, I was so bad.
Yeah. I went to an allergy specialist in New York and they're like, you're just allergic to New York. You should leave. And I was like, I'm not. 6 years later, still there.
And Don, how are you going?
No, I'm good. I had the wedding on the weekend. So the ceremony started at 3:30. I jumped into the shower at 3:15.
Oh my God.
It's just so much little stuff that it's like, oh, the audio is not working because I'm running around. Libby's like, oh, have you brought the cows up? Because we were going to put bows around them and have them at like 3 o'clock trying to call them across. And as you know, I'm a little bit of a parking Nazi. And one guy towards the end, I said, I'm going to get you some colouring in just so you can practice staying within the lines. But no, it was really good. Like 90% of people were still there at midnight, which is excellent. I pulled the pin at 2 a.m., which was enough for me. And all of the young'uns stayed until 4:30. So I have a feeling I might owe a few things to the neighbours.
It looked pretty epic. The setup, everything was amazing.
Well, I feel bad saying this, Aaron, given that I was just recently at your wedding. So I don't want to be rude about it, but that was the best wedding I've ever been to.
It looked impressive.
I'm, of course, biased.
I also found a hack for wedding flowers on TikTok that if you donate your flowers the day after to a funeral home or to a hospital, you can claim all your flower costs of your wedding on tax because it's a donation.
You're telling me this now, Ash.
Sorry, you hadn't hired me before. Well, that's on you. That's...
I like it.
Yuck. Giving you back pocket.
What did you guys get up to? No, boring.
Yep. Nothing like that.
Seriously, what did you? It was a long weekend. You have to have done something.
Well, we took the kids up to Bribey, hung out up there, went and saw Mum a few times in the hospital, and that was about it. Just a nice, relaxing family weekend.
How's Mum doing?
Good. She should be moved this morning over to rehab. So she came out of ICU and mostly good. So surgery went well. A little bit of an issue with some of her medication, setting her blood pressure all over the shop and heart going into AFib. But other than that, I think that's resolved now. So
medication or children?
Medication because of having the children. But yeah, no, she's doing well. The rehab's going really well as well.
Ash?
Got Dad out of hospital, so that was good. Did some baking, played the favourite child, also the only child, so it's fine. Did some baking for him.
That's like saying I went to a competition and I won a gold medal and being the only participant.
You still won the gold medal though.
Yeah, I take
it. And the surgery was all right?
Yeah, surgery was all right. And he had chemo yesterday, so back on track, which is good. And then Monday, had a day to decompress and just went down to Clarabelle, had a nice long lunch and straight back into it.
Nice. What about you, Jack?
We got started getting rid of all the stuff we don't need for the move and then, started packing things up.
So you're still in the mix then?
As in, still in the mix for...
You didn't get thrown out?
Oh, yeah, it was back and forth all day.
Well, should we get started? The latest cut-through venture report got released, the Q3 2024 report. Now, we haven't had time to really digest it, given that was about 45 minutes ago. But Chris has agreed that we'll connect on Friday, and then we'll splice it in to this episode, or maybe we'll do it as a quick standalone. But the high level numbers was that Australian startups raised 695 million across 92 venture capital deals in Q3, according to the latest report. This represents a significant drop in funding compared with the previous quarter that raised 1.5 billion. That's despite an increase in the total number of deals. So it's just interesting to see that number of deals is up, but total quantum is down. But what the report puts that down to is that the funding decline was attributed to the absence of mega deals. So those are over 100 million, and even deals over 50 million fell to a multi-year low. And so the smaller end of town's getting more deals done, but the big end of town is sitting back a bit.
Yeah, I was a little bit surprised when I first started reading it, but yeah, that adjustment for taking out the larger size deals over 50 mil plus, that makes a little bit more sense. I dropped a little screenshot of a post by Harry Stebbings from earlier in the week where he's talking about what he's seeing, and he thinks that the market at the moment, the venture market, is more wild than 2021. So it's interesting, the data set that he's seeing overseas versus what we're seeing here locally.
And I think some of that's going to be AI. So for the listeners at home, the post said, I met with 3 companies today who had raised 100 mil plus, all with valuations over 750 million, and none of them had a product yet. The venture market today is more wild than 2021. I'd say that's the US venture market.
Yeah, and definitely there'd have to be a lot of AI companies throwing that out.
But our market, it's good to see the total number of deals popping back up.
Yeah, definitely. Like and up a fair bit. Like Q1 was sitting around sub 50 deals from memory, and now we're getting up there well over 100. So good to see deal volume picking up, which means investors are getting good deal cadence and deals away, which is awesome. I think the other big part of this, which I haven't fully gotten into yet, but a lot of discussion in this quarterly report about exits, secondaries, and a little bit of commentary about why, like what's driving that, which is quite interesting.
Asher, Jack?
Yeah, I haven't had time to fully skim it, but the thing that stood out to me was just that fintech is still topping the charts with climate tech as kind of those top 2 ecosystems that are in the deal volume, according to the report this morning, but keen to dive into the report in detail and have a really good look to understand where investors are allocating and interested in particular, so we can help our portfolio companies understand that at a greater detail.
Yeah, and I think it's good. It's good to see the uptick in the earlier stage, because really it's a good indicator that investors are willing to take the riskier, have the appetite to make the riskier bets.
Yeah, and in an article in the AFR referencing this latest report, they talked about the IPO drought and that companies are staying private for longer. And they actually, in the article, put an example. They said the thin trading volumes on the ASX for technology companies often results in very small value trades impacting valuations disproportionately. The thin trading also makes sale of large amount of stock more challenging. While investors are willing to pay a premium for the largest ASX tech companies like TechWise, Xero, Pro Medicus, many of Australia's smallest listed software players are trading at discounts to their private counterparts. The disconnect between private and public market valuations was highlighted last month when digital debt collector Indebted lifted its valuation to 350 million after raising 60 million from VC investors. In comparison, Credit Clear, an equivalent ASX traded fintech with comparable technology and revenue, is only valued at 135 million. And so it's just interesting that we're seeing more and more people shun the ASX, stay private, but with results like that as well, the valuations and the ability to take money off the table through secondary sales is one of the reasons why people are staying private.
I don't want to overstate our ability to influence markets, but there would be a correlation between how many times we talk about why founders shouldn't list and the number of listings. I think there's a correlation there.
There's a chart in there. I think we should. But then we'll have a third axis of like the weight of US turkeys,
which will be far more correlated.
Yeah. Now, a Brisbane-based company that is both looking to list based on previous media reports and about to do a secondary sale is Go1. And there was an article in the AFR that said Brisbane startup Go1 punched through the $2.4 billion US mark, which is 3.5 billion Aussie at the time, back in May 2023. But now some investors are willing to part with their slice of the unicorn for much less. Street Talk understands a handful of Go1's investors have expressed their interest in selling their common shares in the company for about $10 a piece. That's US. That's down from the $16.85 US, which Go1 sold shares in its last round. It also implies a $1.2 billion US valuation, or roughly half the price tag that investors such as Insight Partners and Greycroft placed on the business a year ago. Sources said the placement agent has been preparing to bid this cohort of Go1 stock. I think the first thing is it's normally secondary sales is at a much cheaper price than the underlying primary because it's non-productive capital. It's going out of the business. It's not going to growth, and investors put a discount on it. Now, half the value is significant for a company like this, I must admit. We've seen secondary sales in much smaller, not as well-known companies, only at the 10 to 20% discount. So this seems to be a big discount. But you also never know the reasons why someone's getting out. With the deal we're looking at the moment, someone's going through a divorce and needs cash quick. They're motivated just to find someone fast, right? So we can't really extrapolate that to the performance of the company.
And we know it's been disclosed in the media. So 2 of the 4 founders now stepping back. Is that right?
Yeah. So Vu and Andrew.
Yeah. So like I can understand if like at Tribe, we back the founder to really drive the ship. So if half the team are leaving, I can understand why they'd want to take a secondary.
Yeah, I was wondering if there would be a secondaries at least as part of their next raise after the co-founders leaving. But yeah, to your point on that, there'd be investors that have been in Go1 for a long time now. And we know from our own syndicate, there's a lot of investors that are looking for a bit of liquidity for whatever reason. And so it is hard to know, but I'm curious if any of the secondaries are going back to co-founders or departing co-founders. That would be an interesting data point. But the article refers to it being investors specifically.
Yeah, agreed. That's a point that I was interested to understand, and what the messaging would be if it were the co-founders as well. But I think it's also just a good reminder of your paper value versus if you do want to liquidate your position, the value is what the market's willing to pay at the time. So it's always good just to keep that in your frame of reference, I think.
Yeah, 100%. And speaking of Brisbane-based companies, there's another Brisbane-based company that is hoping to become the unicorn like Go1, and that's Attekus. Attekus has a booking platform called Bookable, and it's a product that automates and streamlines booking processes for councils and the broader community with features like automated pricing, invoicing, waitlist management, and integration with other council systems. It was founded in 2017. It services close to 20% of the local councils, and it's just raised $5 million of its first external capital, led by QIC Ventures and participation from QIC. Chris Gillings, who also is the founder of QIC Venture, he was quoted, because he's with 5E Capital, Attekus has become a trusted partner to local governments, providing an essential platform that meets the complex needs for councils for managing bookings and events. The Bookable platform is loved by its customers, evidenced by the fact that Attekus is yet to lose a customer. So we saw this one.
We did. It was early January this year. It was referred to us by Sharon Doyle, Interfinancial, one of our shareholders. We took a look, and at the time, there were a few complex to the deal from memory. Like one of the co-founders was looking to be bought out, and they were also talking about appointing a new CEO and raising capital for a new product development, while also entering multiple new markets. And for us, they're red flags to a potential, or at least points where we needed to build a lot of confidence around.
Well, being a syndicate model, we have to take ideas at the moment and then communicate them. And it's hard enough with investors explaining very, very simple stories. And for us and our energy, when you've got to explain this is going to happen and then this is going to happen and this is going to be a change, and they're going to, like, once there's lots of spinning plates for where we are in our life cycle, our time is better off on deals that don't have the different level of complexity. But it looks like, and 5E and QIC are great investors. They've also got captive funds. They don't need to go and talk to anyone else. They can understand the risk. They can understand the complexities, and they can just support the team in doing it. And that's different to what we can do currently until we get our captive fund underway.
Yeah, and I'm conscious too that was 9 months ago we looked at it. And so, yeah, things may have changed with those complexities. But also, it's interesting for founders listening to note that this was a company that had a very clean cap table. I think at the time, each co-founder still owned 50%. They hadn't raised external capital. They were EBITDA positive. They had reasonably good ARR for their stage, and still, 9 months to, or maybe just under, to close a round. So a good little data point for founders out there.
But yeah, I think had they just been doing a raise for growth, like if there weren't those complexities, they would have squared a raise away very quickly.
Totally. And I know I could see us getting involved in as well if they didn't have those moving parts.
Yeah.
But yeah, something I remember, like, so they're founded by 2 ex-Technology One employees, and it's like every time you meet a Tech One ex-employee, like, you just know, and they've just all come through the same training ground, and like they're all really good operators.
Oh, especially come out of Tech One and look at the sector they're focused on. Like it's selling to local government, state government, perfect sweet spot with that experience base that they would have built.
Yeah, your average founder would have been, we could do a booking platform for everything on the world. These guys are going, you know what? Councils have a problem. We're going to go hard in that.
20% year on year for the next 10 years.
Yeah.
Exactly. Like
that was what I found interesting, like looking at it fresh as well, not having obviously been on the team when we looked at it, you know, their website, their messaging, so niche. And I was like, oh, that's a random choice, but clever. Like, and then when you start to like go through it, it's like, yep, every state, every country has the same setup where there's not a lot of innovation in that sector. So it's a very clever play.
the riches are in the niches. And it's
And in government, once you get in, you're good.
like, if I was to try and list out the top 5, we wouldn't want to use the word fight. So let's use strong and energetic conversations with founders. It's this impulse and inability to believe that a tight, small niche is the path to success. And it always is. And with these guys, if they get traction and they go from 20% of Australia's councils to 100% of Australia's councils and then go overseas, they're going to have an amazingly great business. And then you know what? With an amazingly great business, with lots of revenue and lots of cash and lots of prowess, you then start to go into other markets and other verticals. But what doesn't work is when you try and be all things to all people too quickly and too soon. Yeah, that's it. Yeah. No, there was something that...
We need elevator music to come in.
I have a feeling whatever it was amazing. That's why I'm just pausing.
God, we don't have all day done. Come on.
Hang on. Oh, yeah. And to just an earlier point, because there was another one we looked at, like totally different to this. But my recommendation to founders is get your story cleaned up and don't have moving parts if you're going to come for capital. At least get rid of all the ones. And in this example, the founder was offshore looking to come back here. They had the head co in a zero tax environment, but the majority of operations in another environment and this and that. And it's just, your head just goes, fuck, how am I going to explain this to people? And then what are the risks of any one of those things not happening? Versus in this environment, here's the situation, here's the story, and this is what this is how we're going to execute on it. And this is why you should back us. And if possible, have some of those things cleaned up. And I think in this case with these guys, correct me if I'm wrong, because I think I was the one that called him afterwards and said, hey, we really like it, but this whole buying out one of the partners and then this moving part for us, it's just going to be a bit of a challenge. And it sounds like they went off and resolved it, but they probably in hindsight maybe could have understood and dealt with that before starting the process, or maybe not. I'm just saying anything you can do to simplify the story, because investors get so many deals, so many pitches, and then we've all been burnt with things that were always going to work out, and there's just a few moving parts, and don't worry about it, it's only a small issue, and they create catastrophe.
It's a good point. Like our lunch last week, Don, with one of the team members of one of our shareholders, kind of family offices.
The therapy session. I don't think it was a lunch. We effectively lay down and shared all of our soul and feelings.
But you know what he was saying about one of the company's valuations and how they're justifying it on what they could get in the US and so on and so forth. The point of, well, what we are seeing as investors in market here means we are presented with all of these choices on very different valuations and terms. And I also have limited capital. So in that context, if I'm going to place my investment bets, I'm looking at the choices I have in front of me. And yes, you might be able to index to this data point of some foreign market, but the reality is investors do have choice.
What's the saying? Those with the gold make the rules. And in that instance, I'd be more than happy for that company to go overseas and raise at that valuation and start that process. And I'd probably still maintain pro rata rights. But if you can pull that off and then get a beachhead into that market, go and do it.
Yeah,
but it doesn't mean that we can. Now, keeping on the Brisbane theme. It was sad to see Circonomy placed into voluntary liquidation. So an article in Startup Daily, pioneering Brisbane recycling venture Circonomy was placed into voluntary liquidation on Friday, with founder Yaz Grigalinas saying the 11-year-old business was no longer financially viable. Circonomy began life in 2013 as the charity fundraiser, the world's biggest garage sale, WBGS, offering a wide range of products, including repaired, recycled, or refurbished products, in a bid to reduce waste and cost and increase sustainability. Circonomy launched as a brand because it wasn't just about a garage sale anymore. They changed the brand to Circonomy, launched in 2022, a month after Officeworks took a 21% stake, which I think they put in 3 million, could have been 4. I'll need to double check. In the statement that Circonomy put out, we express our deepest gratitude to all of those that have been part of the journey, our team, our partners, our shareholders. Your belief in our mission has been the driving force behind every milestone achieved. Look, having been there and having been a founder that had to call the administrators, hats off to Yaz for being there to turn off the lights. Often what happens, that gets left to someone else and they go to ground, but Yaz was the one who stayed. I didn't realize that the CEO appointed, Ryan, had stepped down and left a couple of months ago. And so she's obviously been doing the best that she can. I have a little bit of knowledge of the business because for a short period of time, I provided an interim role between Yaz and Ryan, just to help with that founder transition, which can be incredibly difficult. Anybody from the Queensland ecosystem and probably abroad is going to know Yaz. She's a powerhouse communicator and gets out to all of the events. So going to be a very difficult time.
Yeah, definitely feeling for Yaz. Yeah, she did put her heart and soul and life into this, and the amount of time that she's dedicated and the effort she's dedicated to this. So absolutely feel for her. And world's biggest garage sale and Circonomy, that was a huge part of her identity in the ecosystem too. And I always feel for founders when that part of their identity comes to an end. But also there's a lot of people we know involved in this. Like you said, Don, you had a touch point there. Some of our friends are investors. Different people have served on the board that we know. And yeah, if you're in the Queensland ecosystem in particular, like there's no way, unless you've been hiding under a rock, you would know about world's biggest garage sale and Circonomy. So it's definitely one that's going to have some ripple effects. And it's good to see the positive kind of comments and outpouring online with the social media posts too. But Don, I would be keen to hear some of your kind of insights around it.
Look, I'll talk in generalities because with these assignments, there's a lot of information that I will just take me and never. So, but I think there are definitely some lessons that at a high level, sometimes anybody that's met Yaz would agree that there's this sort of sheer force of energy, will, passion, communication, and that's required but not sufficient. And one of the issues here, I remember Yaz came, I think it was to one of our offsites in 21. I'd known Yaz for a long time. I'd met her at an unconference actually, and then done a few sessions, and she knew about some of the life cycle and PAEI and all of that rubbish I force founders to listen to. And so once the investment with Officeworks came on board, that's when I was engaged to help a little bit, because Officeworks, there's always this tension. One of the challenges you've got to understand as an entrepreneur, if you're going to bring in money from a big corporate, those big corporates have certain requirements, and if you think of that as systems, process, controls, rules, and in comes boards, and they've got their own requirements. And so then there's this founder energy that's built it, high flexibility, do whatever was required, energies all over the place in terms of new ideas, opportunity driven, and then a sort of corporate puts in big money, and they were seeking to solve a particular problem, and what then starts to happen is tails start wagging dogs to a certain extent. And what I was trying to do is help facilitate a transition of, okay, in a healthy manner, how do you still maintain flexibility by bringing in systems, processes, and controls? Because you can't live life without those for very long. But I remember it was around about that time, my brother and sister-in-law bought a new place in Chandler, he's a builder, but he had his own vision for the place, and he sent in a 25-ton excavator and leveled the 6-bedroom house in Chandler. And I remember watching it, and I said, mate, surely most of this could be recycled, or you could let people come and. He said the labor costs are too high, the liability of letting people come on and pull stuff out, it ends up costing you just far more. And over the course of 2 days, an excavator just leveled a house. Being a clever bugger, he left 1 bedroom in the corner so it could still be classed as a renovation, and then rebuilt everything around it. And I remember at that time going, fuck, this is part of the problem that Circonomy is going to have, because actually our high labor costs, our health and safety regulations, our rules, like there's this structural impediment. And the vision and the mission is very noble. Save landfill, create employment opportunities to people that ordinarily struggle to get employment in our normal channels. So that is absolutely noble. And with that capital from Officeworks and other investors, they tried to get that momentum, but there's just this structural challenge. And then COVID came along, and there was a huge work from home boom. Now, if you think of Officeworks were trying to stop going to landfill, which is all broken desks and chairs and all that kind of stuff. And what wasn't realized at the time was there was this sales spike that was then extrapolated on, but actually it was a COVID, as it turns out. A lot of it was COVID. And then come like 22, sales dropped off. And then the other sort of lesson was that at the early phase of a business trying to get the vision and mission, you're just hunting for revenue. Like you'll do anything for everyone. So they were simultaneously trying to run an online store, a physical store. They were doing almost like shop fit outs, but using recycled products. Then they were trying to refurbish furniture. Like that's a lot for any kind of business, but that's ultimately the early stage of a life cycle, what you've got to do. But it creates complexity. You've got to have the systems and process to handle stock and inventory, and you've got to be able to have the time and space to train people. But that's really difficult when you're busting your ass to find revenue. And ultimately, one of the theses was that consumers and corporates would be willing to pay a premium for recycled goods to stop it going from landfill. But unfortunately, time and time again, humans, they'll say they will do something, but when push comes to shove, actually, it's a bit like one of the Wagner brothers that I was at a dinner with, and I think I told you guys on one of the episodes, they could make green concrete that's like fully green for a few dollars a cubic meter more, and they can't get anyone to buy it. So even though the government talks about all of these things, even though people say, yeah, when a push comes to shove, the dollars are the things that talk. Yeah. And unfortunately, whilst I've got no doubt there was a retail downturn, which is what they described actually structurally, the nobleness of what they were trying to achieve and the structural reality of the world didn't line up.
And I just want to comment on at the end of the day, dollars do talk. And back in my hedge fund days, that was very true. It was the start of ESG investing. And although people were saying, yes, we want to participate, they're like, we expect the same return. And so it's not something new to the market, but I was hopeful there could be a potential shift where consumers in particular could lead that demand for particularly ups and things like that. But look, at the end of the day, I think we are all struggling to just make ends meet with rising costs of living as well. So it is hard when you're like, I know this is the right thing to do, but it's also going to cost me another 10 or 20%. It's a hard thing to get right in your head. And I think slow fashion is coming back as well with the same type of movement. There's people trying to do the right thing, but at the end of the day, the economics of these things are really, really hard to get right.
We see that in some of the climate tech space. Very well-intended products and solutions to real problems, but the commercials don't stack up for the buy side. And so investors don't invest. And then a natural criticism that comes of that is, well, VC's broken, and it's these non-concentric circles of is, want, should, like you described, Don, where yes, we want the world to be this way, but here's how it is, and understanding that if you're seeking funding for those sort of things, venture capital isn't going to be the place, because there is a return expected. But also on the buy side in corporates, there's that it has to still stand a business case. And look, that could be a marketing PR aspect, and there could be some indirect benefits come of it. But it's such a good point, Ash. Like we often see things where the commercials just don't stack up.
Absolutely feel for Yaz. I remember when I called the administrator, I remember where I was. I remember all the people on the phone call. I remember the first creditors meeting. I had handed over CEO as well, but the CEO had resigned. And so a lot of the time people leave it for others to go and do that work. So I know that it's going to be incredibly difficult for her. And then there's all the questions that come out in hindsight. And whilst I have some views on certain things, the reality is, in hindsight, everything's a pain in the ass. And I remember the liquidator going through on my side, and it's like, 5 years ago, you made this decision, which led to this and this. Can you explain this? It's like, come on. And so this is all the stuff that's ahead of her and head of the directors.
That's exactly my memory of putting a company into liquidation. Was my ex-wife and I sitting in the liquidator's office, and for about 5 hours, just going through all these decisions line by line. Why did you make this transaction? And why this? And what was the thinking here? And why did you make this decision? It's like, bloody hell. I found myself just having to give context of what was happening at the time. But it's not a nice experience by any means. And the only people who end up making money, I'm quite cynical of it, are the bloody liquidators.
For any of you out there listening, take a look at yourselves in the mirror, would you?
If some founder comes and pitches an app to remove liquidators from the process of liquidation, I'm in.
No, but look, in all seriousness, why do liquidators and administrators exist? Like, why do they exist? Well, they come in and make the hard decisions that people weren't willing to make. They come in and they cut parts of the business, or they shut things down, or they seek. It's so difficult when you've got this thing that you've given life to, that you rely on, that is your heart and soul. All these administrators and liquidators do at an unbelievably high fucking fee is come in and make the decisions the directors weren't willing to make. And in so many examples I see, when you have a look at the boards, have a look at who resigned before these things happened, and they normally were articulating things that were going to happen, and people weren't listening, and they said, fuck it, I'm out. And and I say this thing from my situation. I made a whole lot of bad decisions, and I didn't take some decisions I should have made. That's what led to the situation. And that's where I think, as painful it is to go through some of these things sometimes, that's the value that we're trying to bring to portfolio. When we give advice, when we work with them, this isn't coming from either only life in the consulting or whatever it might have been. This is actually taking the steps of success and failure. And when you've got both of those sides, you can have some really empathetic and strong conversations with founders. Now, the founders on the other end need to decide what they're going to listen to and what's relevant and not. But investors that haven't been through that ringer and haven't contributed to the success and contributed to the fuck-ups, I do humbly submit to, they've got a bit of a disadvantage in trying to work with founders.
Completely agree.
Now, changing gears a little bit, VC firm Antler exceeds target for the second Australian fund. Now, I put that in here. Great to see Antler raising funds, because they're the pre-seed people, right? Like, they put money into ideas that hopefully people like us can invest in. But what I found interesting is that one of the comments was, there was a lot of doom and gloom 18 months ago, and people were unsure of what was going to happen. But I think the comment here, which I haven't copied into the show notes for some stupid reason, was actually, he says it was easier and faster than he had anticipated. And so that's one fund that's bucking the trend of everyone else. They managed to raise 77 million when the goal was 60 million. And they've raised it from family offices like co-founder of Flight Centre, Jeff Harris, Queensland Investment Corporation, Macquarie Private Wealth, and a few others. So they're bucking the trend.
Yeah, this is great to see. For founders or investors who might not be familiar with it, it's a program-based approach. So backing individuals to become founders and investing in them along the way. One interesting thing for me, because we looked at their docs, and so on their carry, they have a bit of a different performance fee to others. So they have a 20% of realized profits on the first 1 to 3 times returns, and then it scales up to 25% for greater than 3x returns on capital, which it'd be fair to say almost all of the others in Australia, or at least the ones I've seen, have a pretty flat common.
I mean, performance fees always go in trends, though. You see it in the hedge fund, 2 and 20 was that, and then it went to 1 and 30 or 1.5 and 25 following the returns. And it was really just based on the market at that point in time. If it was a hard market to raise capital, then they'd try to push the management fee down just to get AUM in the door. So it comes in trends, is my opinion on that.
Well, if you subscribe to differentiation, maybe we should be like 1.92 and then like 21.67.
Okay.
Jack's going to lose more hair by having to do that math.
And somehow indexed to inflation. Wasn't Benchmark VC, was it Benchmark who had no upfront, like no management fee, but a 30% performance fee?
They're also a partner-led thing with like, I don't think you can even buy your way onto their LP list.
Yeah, I think it's great though to see Antler being able to raise money and get traction from the family office space in particular, and get some capital from the Queensland government as well. It's a good thing to see that hopefully there'll be more interesting startups in the pipeline for us to be able to invest in. And it's one of those relationships that is great for us to have in that ecosystem, to know what's coming, meet the founders earlier, so that we can build that trust from the investor side, so that when they are ready Series A or pre-Series A, that we're already in their headspace. They know us, they trust us, and they want us to be there. Actually catching up with one of the guys based in Boulder, Colorado, in an hour, who I went to uni with, who runs the Antler there.
Awesome.
Nice.
Yeah, and shout out to Stefan Knight, who joined Antler to head up the Queensland region, and they're actively looking for founders to come into their first intake for the Queensland program. And also to Mike Abbott, who was instrumental in bringing Uber to Australia, and he's now part of the Antler program based out of Sydney as well.
Great. Yeah, well, look forward to seeing who they invest in. So the last item, this is literally, as per my messages, has blown my mind. I am equally excited as hell, and there is a sick part of my stomach that just says, we're not in Kansas anymore, Toto. But Google released a thing called NotebookLM, and I put it in the show notes because somebody else on LinkedIn had made a little podcast. And Aaron, you went and just took our pitch deck PDF.
Yeah, our cap raise deck. That was all.
Just our cap raise deck, and put it into this. And it's created a 2-person, 6-minute podcast about Tribe, which I'm going to play now. And I swear we haven't typed this or anything. This is just our pitch deck, yeah?
Yeah, just the pitch deck.
There's no fancy stuff that you're lying to me about behind the scenes?
Literally upload a file, hit generate.
Ever feel like Australian tech companies have a mountain to climb when going global? I mean, especially getting a foothold in the UK and US, right? It's a long way to go. And I don't just mean geographically.
It's true. You need more than just a great product to crack those markets. Different rules, different networks. You're practically starting from scratch.
That's where, and this is interesting to me, Tribe Global Ventures comes in. They're trying to build that bridge for Aussie and New Zealand B2B tech companies eyeing global expansion, especially into the UK and the US.
And what's different about Tribe is they are a team of entrepreneurs. They've actually walked the walk, scaled their own businesses globally.
So they bring that practical experience to the table, not just theoretical advice.
Exactly. It's about having been in the trenches, knowing the real challenges firsthand.
It's not just about the money, right? They're in it with the founders.
You got it. And that's why they call themselves Tribe. They've built this whole network, investors, advisors, experienced entrepreneurs, all there to lend a hand to Tribe's portfolio companies.
Okay, so you have this whole tribe in your corner ready to guide you and make connections. What does that look like in practice? I mean, what do they actually do that's different from your typical VC firm?
They've got this 3-pronged approach, right? And it goes way beyond just, here's some money, go conquer the world. The first thing is market expansion. Think about it. You're a young company trying to crack a market like the UK. You don't know the right people, the culture's different. It's like you're speaking a different language, even though it's still English, right?
Totally. It's like being dropped in a foreign city without a map or a translation app. Overwhelming.
Exactly. And that's where Tribe really steps in. They've got their own network in these markets, their own experience. They can open doors that would normally be slammed shut to a newcomer. They even, and this is cool, they organize trade missions, actually take the founders over. Rolling.
That's what I'm talking about. Anyone can offer advice, but Tribe is literally making the introductions, setting up the meetings. They're like, what's that term? Sherpas, guiding these companies through the Himalayas of international business.
Love that analogy. And that actually leads perfectly to their second area of focus, strategic support. This is where Don McKenzie's background, both as an entrepreneur and a consultant, really comes into play.
So it's not just about making connections. They're helping companies refine their whole approach.
Absolutely. They'll help refine a company's strategy for that specific market, make sure they have the right team structure, even help with those shareholder issues that can pop up as a company starts to scale rapidly.
Oh, I bet. That stuff can make or break a company, especially in those crucial early stages. This is way more comprehensive than I expected.
It really is. And then, and this might be the most important part, they're huge on what they call culture and performance.
Interesting. What's that all about?
See, they get that a company is only as good as its people, especially the founders.
Yeah. It's easy to forget founders are human, too. They need support, and not just with spreadsheets.
100%. This is high-stakes stuff, building a company, especially trying to make it globally. So Tribe provides coaching frameworks not just focused on the team's performance, but on the founders themselves, their well-being, resilience, all of it.
Okay, so they're not just throwing money at the problem and hoping for the best. They're really invested in the long-term success, both of the company and the people running it. But does it work? I mean, do they have proof this approach actually gets results? So it sounds like they're really in it to support the founders, but obviously it comes down to the investment itself, too. They seem to target a pretty specific sweet spot, right? B2B tech companies, kind of that pre-Series A to Series A stage, looking to expand to those big markets, the UK and the US. What's the strategy there?
Yeah, you've hit the nail on the head. They've got a very clear thesis, and it all revolves around that stage of growth. See, at that pre-Series A to Series A stage, those companies, they've already proven themselves, right?
They've got a product that's working.
Exactly. They've got traction, at least in their home market, which for Tribe is Australia and New Zealand. But going global, especially cracking those big competitive markets, that's a whole other ballgame.
So it's both like proven potential, but also huge room for growth.
Exactly. And that's where Tribe sees the opportunity for impact. That's where their expertise, their network can really move the needle, help those companies navigate that tricky transition.
It's like they're finding these hidden gems, these companies with the potential to be global players, and they're giving them the tools and support to make it happen.
That's a great way to put it. And their track record since 2021, it really speaks for itself. They've grown their capital, invested significantly, expanded their network of investors, and get this, they have a 98% founder net promoter score.
Whoa, 98%.
Yeah, that means 98% of their founders would recommend Tribe to other founders, which in the world of venture capital is pretty unheard of.
Pretty impressive. But it sounds like they're not stopping there, right? Making individual investments, that's one thing. But they're talking about building a whole platform. What's that about?
They're definitely playing the long game. Right now, they're working on setting up their first captive fund, an ESVCLP, or early stage venture capital limited partnership.
Okay, and what's the benefit of that?
Well, for one, it lets them move faster, and it also attracts larger investors, institutional investors who aren't as keen on, the faster-paced world of syndicated deals.
So it's about creating more opportunities, not just for Tribe, but for the companies they're looking to back as well.
Exactly. It's win-win, more streamlined too. Speaking of which, people always wonder about the business model in venture capital. It can seem a little opaque sometimes.
Yeah, fair point. So how does Tribe actually make money?
It's actually very straightforward. They have management fees on their investments, both the syndicated ones and coming up the captive fund. And then there's revenue from those trade missions, events, things like that. And of course, carried interest.
Carried interest, meaning?
It's a percentage of the profits when one of their portfolio companies exits, like an IPO, or if they get acquired. So their success is directly tied to the success of the companies they invest in.
I like that alignment. Okay, so wrapping up, we've learned a lot about Tribe Global Ventures. They're doing things a bit differently, putting a real emphasis on supporting founders, not just funding them. It's a fascinating model, and it seems to be working.
It really is a breath of fresh air in the venture capital world.
It makes you wonder, what really makes the difference when you're building a company? Is it just about getting the biggest check possible, or is it about finding the right partners, the right tribe to help you navigate the journey? That's something to think about. Thanks for joining us for this deep dive. Until next time.
Like, that articulates it better than we do.
That is literally insane.
Hey, speak for yourself.
Yes. Hence why we need you, Ash. I
was losing my job there for a sec.
I uploaded the Squizify IM and I've only listened to the first 30 seconds. But the way it starts talking about, like, this isn't just robotic. Like, this is painting.
Well, can you send me that link? I'll put it at the end of this episode.
Yeah, absolutely.
Is there any reason why we can't do that?
I haven't listened to it, but I'll share it.
I'll listen to it first to make sure that it's not rubbish.
But like, the way it's painting this, like, very creative picture of a chef in a kitchen, it's like, this is next bloody level. This isn't robotic, generic text type, like, far out. So now,
are we irrelevant now? Are we cooked? Are we done? Or is there still a world for us?
Well, we were joking in the text before we started recording that if we could train this against our previous podcast episodes and give it like 6 books to read on the frameworks that we use, we could just let it create the podcast for us. Probably wouldn't have the level of Sharts and weird analogies and personal backstories and traumas. I don't know, maybe I'm wrong. Maybe we are just totally replaceable.
I'll train it. I'm ready.
No, well, I need to upskill on this. In the wedding speeches of the groom, he did do a shout out to his new brother-in-laws, and I was described as the illiterate one. So that was nice. Look, I think for me, and Ash, you pointed out earlier, it's those that can harness this technology in a world where content is about to become just click of a button. Like, that's the bit that makes me a bit sick, because we're really going to have to up our game of standing out, because we're about to have a tsunami. I can just see it. There's a tsunami of audio and visual content that is just going to make people's worlds so busy. And we've got to make sure we're stepping up.
Yeah, I do think there could be a swing back towards less is more. Obviously, the algorithms on LinkedIn as well as Instagram and so forth have all been in consistent content at least once, if not twice, if not 3 times a day, if you're talking TikTok, in order to go viral. But I think, to your point, Don, in this world where content generation is now going to be clicks of buttons, and you go from taking creators 4 hours to record a piece down to probably minutes, if not seconds, depending on what they have at their fingertips. It's going to be those key pieces of content that last and have true impact on consumers, because people are going to want less, more curated content that is for them. And so it's just making sure that what we are putting into the ecosystem is really high value and will cut through the noise. In my opinion, I think we're going to see a shift. We're already all time poor. We already feel like we don't have enough time to read the latest articles, listen to the podcast we want to get to, and with just more noise in the ecosystem, I think consistent and authentic content, which is you guys to a T, for better or for worse, that'll keep people coming back.
You mispronounced the saying. It's for better, mostly for worse.
Dad jokes, 101. I'm learning.
I'm waiting. I want a version of this for my email inbox, like just that, like converting this podcast type thing into an virtual assistant.
Yeah, end of day podcast of everything that's happened in your.
Yeah, they're available.
Look, I need your help, Ash. But I have reached a point. I can't. I do a Google search and I get frustrated and I revert to GPT. I just find all my desktop searches now are through chat, unless it's something I need that's very timely piece of data. Just rather than doing a search and then trying to extrapolate, like, just actually, hey, GPT, tell me the answer.
You are using a lot more energy per GPT than Google search, but that's a different conversation.
Well, this comes back to that point before about climate change versus commercial outcome. Like,
yeah, but you still got to validate what GPT comes out with. So then you're really doubling, if not tripling.
Yeah, no, that's a good point.
Yeah, me and my carbon footprint are not. Well, speaking of high quality content. Shall we do the opposite and jump into some charts?
Let's do it.
Yes.
Sorry, Jack, did you have anything to add on that?
No, all good, done.
Jack's just sitting there going, fuck, anything to automate these Muppets.
What are these green boxes around?
I don't know. That's not me. I promise it's not me. So this isn't really a chart, but it belongs in the chart category. Ash, you shared it. This is corporate lingo that doesn't exist, but maybe it should.
Right, Don, we can't hear it, by the way.
Yeah, I can't hear it, Don.
He can't hear us.
What?
The limping donkey.
We couldn't hear it, Don.
Oh, what?
We were laughing at the fact you couldn't hear us.
So what do I do now?
Hey,
So how did you not hear it?
you're running the show.
I don't know. We just could not.
Too good. Don, you're going to watch that back because like we done that, Don, we can't hear it, but you're laughing and not acknowledging us because you're listening to the video.
Well, I'm laughing at you laughing, thinking that this was like really funny.
Oh, that's too good. Just you'll be able to cut it in, like just remove our voice from it.
Yeah, okay. Well, anyway, I'll twist the nip on that then, Jack, and I'll get that sorted.
Robocopped, which just means being replaced by AI. Where's Brian?
Brian was robocopped. Pump cheddar, which means throw money at the problem.
Pumping Chad, dude. We're all just gonna have to slurp the noodle. It's not gonna look pretty, but we gotta do it.
I'm just gonna take a quick whiff of this. A quick whiff is kind of a status check-in on the project.
I don't need all the details, just a quick whiff. Limping donkey, which is just a reference to a company that thinks it's a unicorn, but is kind of a fraud. I thought they were a unicorn. Did you see their valuation? Nah, dude. Limping donkey. Trust me, I know people who work there.
Twist the nip. Apply pressure to meet a deadline. Guys, twist the nip on this. We gotta hurry. This is corporate jargon that doesn't exist, but
Yeah, sure. Have AI replace that, you dickheads.
To be fair, it was my partner who sent it. He'll be mad if he listens to this and I claimed it. So
Yeah, okay. No, and I have a feeling there's a few limping donkeys in the ecosystem. Now, this was a chart from Charlie Bailio. Having more confidence is a good thing in many areas of life. Markets are not one of them. The more confident investors tend to trade more and take undue risks, leading to worse performance. So what this is the net return for turnover. And for the people that are turning over, so trading a lot, their returns are pretty bloody average compared to those that actually just sit. Much better returns.
Don, what is the basis of that? No,
What is the basis?
yeah.
Don't ask.
Well, this is the-
this is
I
sharp.
know, I still really struggle with this whole Sharts concept. I'm like, I worked it with quant hedge funds and HFTs for 6 years. I'm like, oh.
So you're used to looking at charts that have meaning.
Yeah, look, the whole idea here, Ash, you're just supposed to take a whiff,
Yeah.
not go. But what it is it's the turnover in volume.
Yeah.
So the percentage annual turnover.
Yeah.
So I guess in dollars, let's just say that it is. And then what the net return is. And so the people that are turning their portfolios over lowest, ending up with the highest net return versus the people that are turning over their portfolios the highest, they're actually almost half the total return.
Yeah. I guess if it's an individual basis, not institutional trading, then maybe that makes sense.
Yeah, unless you're Berkshire Hathaway. Like they're definitely on the left side there.
Oh, yeah, totally.
So this is the percentage positive between 1928 and 2023 of the S&P's total return over different timeframes. So over one day, 53% of the time, the S&P ends positive. 5 days, 57, 10 days, 59. And this goes all the way to 30 years, which is 100%, which makes sense. 20 years is 100%. Over 15 years, 90% of the time it ends up positive. 10 years, 94%. It's just, again, I think that correlates to the time in market rather than timing the market. Now, this is more of a dig at my brother-in-law who hasn't done his tax return in 10 years because he sees it as like forced savings because he's going to get refunds. And so this chart is for you because the purchasing power of money just goes down every year because of inflation and the money supply. And so for listeners at home, since 1995, this is the US dollar. The purchasing power of the US dollar is down 15%. Now, if you just take the S&P 500, it's up 1,000%. Just
You said
having
You said it's down 15. It's down 50.
50. Yeah, 50.
50%.
52%, which we talked about last week on just our McDonald's drive-through.
Yeah.
This is a chart for those at home. It's the Silicon Valley Bank from 1990. It's going up 2010. Then it just hits this exponential phase where it goes from like $100 to nearly $700 in COVID and $700 to zero in like 2 months. And I remember that time as well. That was wild.
Yeah.
And it's just amazing that didn't lead to contagion.
Yeah.
Yeah, 100%.
You were in the US at that time, Ash. What was it like? What was the vibe then with
The whole period from, call it February to really December of that year, the markets were so volatile. It was every day you knew something was going to be thrown at you, and you knew you were going to have to chase people on margin calls. There were going to be portfolios that were trying not to blow up. And it was the fastest learning curve of my life in terms of seeing how a 20-volt product can swing the market in front of you. And then when Silicon Valley Bank went down, I had a lot of ex-Lehman and ex-Bear people on my team. And so they're just like, all right, strap in, here we go. So I think everyone did really well to not see as big of a fallout as we did back then.
Yeah, nice. So this is getting into some bit of randomness now. So I didn't realize, but did you know that a horse has like almost 360 degrees of binocular and monocular vision compared to a human that obviously we have our blind spots, but where's my arm? So what's that about? About 180 degrees. It's amazing that a horse has such a wide field of vision. So for those at home, there's blue for binocular, so that's just looking straight ahead, I guess. And then monocular is out the side of your eyes. A horse can pretty well see its ass.
Yeah, this is why horses need blinkers to stay focused.
But that's why they need blinkers.
Yeah.
Got it.
That's crazy.
Yeah.
Where did that come in your feed?
Do not ask that question.
Your algorithm would be fascinating.
Someone called him a horse's ass.
So, Dirk Shamler, what 2024 feels like? Working in product, and it's Ken and Barbie from the Barbie movie with all that fluoro on the left. Working in sales is Joaquin Phoenix from the Joker, along with, I don't know who that is, but it's aggressive. But that is
so
many of
accurate.
the board calls and stuff we're having. It's like, if you're in outbound sales, good luck. It's hard.
It's brutal.
Just a bit of kindness. No matter what you're going through, always try and help people. Instead of saying fuck off, ask, how can I help you to fuck off? Be kind.
Oh,
I feel like
think
you
that's
need
true.
to get with that undone.
Yeah. This one's a bit more serious. And there's a Japanese legend that says, if you get onto the wrong train, get off at the nearest station. The longer it takes you to get off, the more expensive the return trip will be. I have some affinity with this saying, but I think it's true for founders and investors. How often, coming back to some of the stuff we discussed earlier, do people just stay on the train hoping that it's going to work out, but all you're doing is creating more and more pain for yourself? That's why administrators exist.
so true.
All right, what are we looking forward to? We've got a couple of pictures today, don't we? I'm looking forward to that.
Yes. What am I looking forward to? Can someone else go first?
I with friends from New York flying in today, so taking a couple of days to show
Nice.
Adelaide. Nice weekend. Go up to the Barossa, wine tasting. Yeah, it's gonna be a fun weekend. I'm excited.
Nice.
What about
Yeah.
you, Jack?
Haven't got anything planned, but I think, continuing on from last week, packing up, and then Anna wants to go and sort out a few things like flooring and stuff. Got to pick a few things.
Jack, the energy in your voice. It is too early to sound as defeated as you sound right now.
We had a head start done, so the sooner we do it.
We're going to go choose flooring
Yeah.
and pack up.
That's fun.
Jack has nothing. Oh,
So defeated today.
Hello, darkness, my old friend.
well, I worked out this morning. It's 2 weeks and 2 days until getting on a plane to the US with our mission.
That's amazing.
It's amazing, and it's freaking me out a little. So I think we've got our last workshop for that tomorrow for the participants getting ready.
We have a lot to do before then.
We have so much to do.
Can we just turn it into a notebook podcast? And
Probably could. What about, oh, did you say, Don, what you're looking forward to?
Going out to Warwick to test his new toy.
He's got it strapped to the side of his office.
Jack, I'm just looking forward to some rest, I'll be honest. That last week almost killed me. Actually, one thing I am looking forward to, just in case you're aware or weren't aware, that if you have a car owned by a company and then have the wrong PO box addressed, and then your rego, because they don't send you letters anymore, if that also doesn't have the right email address, you then have an unregistered vehicle. With a lot of cameras now, they take a photo of said unregistered vehicle, which is a fine. If you don't pay that fine because you're not getting the fines, you get a letter that then goes to effectively the company's registered address, your accountant. So you have to deal with the indignity of your accountant telling you that a warrant has been issued for the seizure of the vehicle.
As much as I want to laugh, I was driving with the family one day and had the police pull us over. They said, do you realize your vehicle's unregistered? No. And it's the exact same scenario. Company registration had changed my address on my license, not thinking about the company address. And so they proceeded to take the plates off the car. We had to leave it on the side of the road. I can't even remember where we were, some random town. I'm like, what do we do now? So I had to get the car towed. At least they didn't impound it. That was nice of them. But yeah, one of my
So I'm looking forward to repairing the relationship with my wife, who again has no shortage of examples as to why I'm not a suitable life partner.
Would this be the same vehicle needed for the school, for the daycare runs? And
Yep.
all right.
All right. We'll see you later.
See yous.